The euro is up a cent from a 16-month low against the dollar, lifted by strong German exports, while Mideast tensions continue to lend support to oil prices. This is trading at 12, the market pulse. OK, let's kick off with the euro. Joining me for a closer look at what's behind today's rebound is Reuters FX analyst Neil Kimberley. Neil, two factors seem to be driving the euro higher today. As I mentioned, the strong German exports, but also this record short position on the IMM. How far has this bounce got?
Jamie, you're right, and also we should mention the fact that Angela Merkel's meeting with President Sarkozy, which was well flagged, no surprise to us, but it's come at the same time, as you say, this IMM position is massive, so everybody's short of euros out there. We've seen a little move up. Tokyo was closed this morning in Asia, so the intraday guys in Hong Kong, Singapore, around the area, their stops were squeezed in early London, some macros buying back. We've been up to the 127.80 level. There are good sellers between 127.80 and 128. The figure, stop loss is just above that, and then real good sellers coming back again, 128.30 to 128.60. 128.5 is as far as I could see it going. Essentially, people trimming their positions, but underneath it all, people still wanting to keep a core short euro position. Well,
it certainly seems that way in that chart we saw of the IMM, 138,000 net short contracts. It's also worth mentioning this morning this German bill auction, 6-month bills. Berlin paid a negative interest rate, a negative yield for the first time ever. What are the FX guys telling you about that?
You saw it when it came out, the euro dollar came down about 20 or 30 points, so the initial reaction was negative. It just feeds into the fact that for all the hyperbole and the news flow, nothing's changed. Investors looking for return of their capital, not return on their capital, and prepared to pay a little bit away to get German paper.
And finally, let's take a look at the crosses, the euro crosses. Euro yen, is this a corporate hedger's heaven or a corporate hedger's hell?
It's absolute hell for the Japanese exporters. All their option related strategies are getting knocked out each time we go through a big figure on the downside in euro yen. It's leaving them naked on their euro yen hedging. On the other side, eurozone exporters, they're in heaven down here. They're buying longer dated euro yen hedges. They're locking in 5-year, 7-year hedges, competitive advantage against their Japanese counterparties. For them, it's great news.
And Euro Swiss, we know that SNB has a floor at 120 on Euro Swiss. It seems to be the most obvious buy out there, yet we had one bank today saying buy it, but with a stop below at 119.90. Is there any point in having a stop below 120?
I'll tell you, if you've got a stop at 119.90, the slippage on that stop loss, if it gets hit, is so great that you're going to get done anyway. You're just going to be wiped out. But the point is, yes, it's an obvious trade if you believe the SNB is going to hold it, and so far they haven't been tested.
Neil, thank you very much. And finally, on to oil. The threat of supply disruptions from ongoing tensions between Iran and the West continue to support Brent crude oil futures. Brent is down slightly on the day, but is once again outperforming WTI. It is just holding above the 200-day moving average, its longest run above that key technical support for 2 months. Well, that was today's Market Pulse. Join me at noon GMT every weekday for your daily fix of the Market Pulse. I'm Jamie McGeever. This is Reuters.